Hello traders, this is John Kicklighter, Chief Strategist for DailyFX.com, here with a Forex strategy video in which I want to talk about something that is incredibly important to my own trading, and I think that each of us should practice when it comes to our setups and how we execute our trades. Specifically, I'm concerned about an aspect in which many traders seem to go into a setup where they have their technical and fundamental conditions, and they think with X, Y, and Z lining up in the same way that they're willing to take a long or they're willing to take a short with their stops and targets. Now, when it comes to having an alternative view, an alternative scenario, it's either I'm in or I'm out. All right, either I hit all these requirements and I place the trade, or otherwise it just goes by. But oftentimes there is an opportunity to have a trade setup ready to go should an alternative scenario present itself. All right, we shouldn't limit ourselves to one view of a possible trade opportunity. Now I want to look at this particular concept on two pairs. One pair that I was in and I got stopped out on the dollar yen, and another pair in which I have just recently gotten short on the Euro USD. So we'll look at the dollar yen first. All right, and this is a proof of concept where sometimes it doesn't always work, or there are elements there, but it might not necessarily fit the kind of trade that you want to put yourself into. Now with the dollar yen, I had gone short, all right, on this particular trend line. We'll get rid of this for now. We were at this trend line top here, and we had tentatively seen a hold and a pullback. This is an 8-hour chart. Now, there is an opportunity that, yes, it does hold and reverse, and there's also an opportunity and scenario where it continues moving higher. As you can see, we had both play out within that short amount of time. I was at one point in the money, I believe, by 50 points, but that wasn't my target, so I did not hit my necessary return so I can actually book profit. Got very close, but I didn't actually hit it. So with my setup, I was looking specifically for a short. You can see the technical reasoning behind this. The fundamental reasoning was a similar sort. Right? You're looking at essentially congestion from fundamental aspect, just like you are from the technical aspect. Now in the fundamentals, I'm looking at a currency pair that does not do well with general risk trends. There is not a safe haven here. There's not a high yield currency here. They both fit into the quote-unquote safe haven grouping. But when we have that risk on theme, how does this pair develop? Well, the US dollar will typically falter because of risk on, because it's a safe haven currency, but then so too do the yen crosses rise on that aspect. So you have a selling position on the dollar, which pushes this pair down, and you have a buying pressure on the yen crosses, which pushes this pair up. So that aspect was stable. All right, that was not a major catalyst, a major driver for this pair, and that was something that kept me relatively confident that something more prominent and more clear, like a technical pattern here, would help keep this pair in place. Now, the other aspect to this is the relative monetary policy, a big theme that has really started to gain traction and is probably going to be very important for the coming weeks and months, at least for the next quarter. And that aspect has certainly worked against this pair, or actually helped push it to the upside. All right. My expectation was that the discussion of a taper or stimulus would essentially go on deaf ears, that the dollar would meander rather than take for a consistent direction, and also with risk trends not really giving us a clear bearing, you would have a pair that doubles up for congestion, has the fundamental and technical support for congestion. Initially, this theme seemed to work, but instead, what we've seen was a persistent US dollar and a push towards record highs on risk trends. Now, in terms of my favored outcome, I would have preferred to move to the downside, but that doesn't mean that there isn't a trade to the upside. In fact, a number of people I know were actually trading this for a bullish view. Now, seeing a breakout certainly offers a technical connotation that there is something in the way of possible follow-through, and we typically see congestion patterns after a big rise, especially asymmetrical, as being continuation patterns. From a technical bearing, this might have a good argument for a move to the upside. But from the fundamental aspect, this is what has actually curbed my interest. And the full reason why I'm not going long on dollar-yen. Because I am exceptionally dubious of positive risk themes, and especially as we peak to new heights. All right, there are a number of reasons, and I detail them on a regular basis in the daily videos. But seeing this continue to advance is essentially a necessity for driving the yen crosses, which are carry trades, higher. All right, because you also have to consider that carry trades themselves have become exceptionally expensive. Something that the Aussie yen and its yield differential highlight quite aptly. You can also see it in the dollar yen and its carry trade, which is essentially non-existent. All right, but I'll really focus on the higher yielding pairs that would get more of the buoyancy. All right, so yes, we can have a technical break, but my concern is the follow-through. All right, so in this scenario, and heading into this trade, I saw a probability of a break to the upside. I saw a probability of a break to the downside. And there was a trade option on both sides. But it just happened to be that the fundamentals, which are a bigger overall catalyst, and the one that ended up proving me wrong, was the one that carried the greatest follow-through opportunity. So a move to the downside, if it were going to take place with the fundamentals that were not to be, would have more likely pulled us down further and faster. This move to the upside can continue, but that scenario is going to be problematic because it doesn't necessarily have the qualifications for follow-through. Namely, I'm very dubious of restraints. All right. Now, for the Euro USD, I actually went short today. I saw a opportunity with a hold on this previous trend line support, which is a channel floor, and now it's a potential resistance. Happens to coincide with the 135 level, an even figure, and generally we've had congestion in this area, vicinity, approximately 50 points of range for some time. I think that this is a decent opportunity from a technical perspective to see a former technical level used as a springboard for a trend shift. This is a technical view. The fundamental view is that there's always the possibility of risk aversion, and if risk aversion does kick in, it will carry more momentum. And also with the ECB recently altering its views on monetary policy with that rate cut, and then potentially discussing the opportunity of further stimulus going forward, we are starting to see the interest rate forecast or the interest rate expectations for this pair is starting to really move against the euro. This could be something that draws the currency pair down as well. The opportunities are clear. You can see a move potentially back down in its most aggressive form towards here. This will take some time. And if these themes continued through the medium term, it can continue to go even further. But I'm going to keep it to the kind of time frames that we're still working with in these trades. So that is my preferred bearing. That does not necessarily mean, however, that you don't have an upside potential. Breaking 135 is a possibility, and you can see that this former bear leg is going to see a deeper retracement. Breaking that even handle would offer a technical cue. Fundamentally speaking, if risk trends do maintain their buoyancy and the ECB shows no interest in immediately following up with a new stimulus program to back up its rate cut, then the euro can further retrace its ground. This would be amplified for a dollar that drops if there is fear that the taper is going to be pushed back to March, if not later. So you have a possibility of both a short and a long setup. Right? This is not a one-sided trade. You can actually derive multiple strategies from this technical and fundamental combination. However, it just so happens that I prefer the fundamentals and the technicals to the downside. Would I play a move to the upside? It's possible. I would probably play it in a smaller size and with more proximate stops and targets, because I don't think it has as much potential as the downside, but it's an option. And I want to keep these options open to me. If I only look at, if I have to first whittle down from the number of pairs, the dozens of pairs I look at on a daily basis, and I only see trade opportunities in, let's say, 5, and then I cut down to the ones that look active now, and it only has maybe 1 or 2, and then I only go with a strategy for one side or one aspect of that trade, I severely limit my opportunities. If I keep an open mind and I see the possibilities, especially as conditions change, if we see a range that turns into a breakout, the connotations are very different. There's a new opportunity there, and we have to adapt to it, just like with the dollar-yen. If we see a fundamental possibility, like the Euros and GP figures that we had, or we're talking about the FOMC expectations after the Yellen speech, if they don't, as they develop, so too do the probabilities or our scenarios going forward, where our path starts to change in front of us and new probabilities start to arise, and we have potentially new trading opportunities. So we have to look at the market and our setups as fluid, as dynamic. We can't just expect to hit and get into a trade. All conditions stay the same until we get out of the trade again. We have to be prepared for changing backdrop of trading conditions. And if the backdrop of the trading conditions change, the argument should be, so should our trading approach. All right. So I just want everyone to look at each trade that they're willing to take. If you're looking at, let's say, a range, and you are trading a reversal in that range, think about what the aspects would be needed, what would be needed to offer a breakout, and whether the breakout would be as attractive as the range. What would be needed to make that breakout look as attractive, if not more attractive, than the range, right? And vice versa. Look at each setup as a multi-tiered opportunity. There are always possibilities that we have a range or a breakout or trend development. It's just a level of severity of those probabilities. Perhaps the range is far more likely, the breakout might be moderately likely, and then congestion that goes nowhere might be extremely low likelihood. All right? Being able to see the market and probabilities will put you in a much better position to trade and not stick with trades that are not performing. All right? That's a very important aspect in general of trading. You want to approach this market with as many opportunities as possible, just with the knowledge that these are all probabilities and not certainties. All right? So hopefully this is useful incorporating into your trading. We'll do another Forex strategy video tomorrow.